Member of T3 Trading Group, which is an SEC registered broker dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you and that of your own financial condition. There is the position disclosure. I'm out of the XLB. I am into the XLU as a swing. We traded the XLI short today as a trade. I've also got some XLP on the short side. I put on a VIX call spread today right at the open. Is that it? I guess that's it in terms of, and IWM short is new. Oh, but I'm out of UPRO. I'm out of UPRO. No longer in UPRO. Got out of that. Forgot to take that one off. All right. Wow. Yeah, so today was a classic of what we used to call, I feel like we never get them anymore, day to take notice of. Today was a day to take notice of. The market got cracked. SPY's down 1.5%, Q's down 1.9, IWM down 2% on the day. What else? Gold down 3.5% on the day. Yeah, gold and silver in the middle of the day, like 10 after 11, got completely wrecked. Silver down 11% on the day. Crypto down 3.25%, 3% on the day, maybe a little bit more than that. Breaking yesterday's low, which is a little bit notable because the daily chart tried to give us a pivot low in crypto yesterday, so we broke that. That's not great. So bit of a bloodbath out there today. You can see on the 5-minute chart, we just gapped up a little bit this morning. It was looking a little bit sleepy, and then we broke through these lows here, and it was just watch out below. I mean, this sell-off here was brutal. We did a great job as a team scalping the long on this bounce, being really patient. I mean, once again, did not try this a single time until basically the last red bar here, when that acceleration seemed like it was breaking even further. Took the long, was out of it very quickly, out of the SPYs by the ADMA. That's what I went long, and I went long TNA also via the IWM, or the IWM via TNA. Same deal, out pretty quick by the ADMA. So couple little scalps there. But today was a real day to take notice of. Let's look at the daily chart damage, starting with the SPYs. So, little bit of like a bearish engulfing candle on higher volume, big, fat, negative Maribozu. Again, a classic candle that we describe as a day to take notice of. These often lead to something more. On top of that, tomorrow is our seasonal peak, right? February 13th is our seasonal peak. And I keep saying, guys, this is not a day-to-day thing. It's not a day-to-day thing. We looked at yesterday's afternoon meeting and in the morning meeting today at February a year ago, which felt like a very similar setup. And I think February a year ago, it was basically this Thursday, which was today, that really kicked off the selling. So we are, 1 year to the day, basically, from a trading perspective, from the beginnings of a genuine bear market that happened. Again, I am not predicting that we're going into a bear market by any means, but I do think that a 7 to 12% correction is very, very possible as we get into this weaker seasonality, especially if the things that I keep talking about trigger, which is the break of the January-February lows in the S&P that trigger the systematic selling. Now that we have all the option hedgers seem to be back involved. And let me go back to Pat's note from this morning, because Pat's note this morning was just absolute money with some of the information in here. We talked about this JP Morgan part, which was interesting, but really what I want to reference is these charts, right? These charts in conjunction with our classic when crash thought process. Looking at the NASDAQ skew really ticking up. Despite the fear, we see a rather large short base in VIX futures. I think this is huge, this VIX portion of it. And it was really reading this part here that gave me the conviction to put on the VIX call spread today. We see VIX ETP complex long 105 million of Vega. These products act as short gamma and have to buy on up days, sell on down days. In a scenario where VIX is up 5 points, we see these funds will have to buy nearly 19 million of Vega combined with the above. A spike in VIX can be dramatically exacerbated. Everyone's short, and they got to buy on the way up in the so just that's a really notable positioning piece of information there in Pat's chart in conjunction with the systematic bear flow that will really begin to come in this market below these January, February lows. Somewhere beneath there, the market gamma will flip negative as well. It feels like we're getting close. It feels like we're getting close. The final thing is to see if correlations can increase, which we can talk about in a second. So, we'll see what happens. If we get there tomorrow, to this level tomorrow, we'll be, pretty extremely extended into it. So we'll see how that actually plays out. But we closed on lows today, so it does not look good. And the final big thing that I've been trying to pay attention to is if correlations can increase. So really, I've been watching these extended upside sectors, XLB, XLI, XLP, XLU. If you start to see these areas of the market sell while you are continuing to see IGV and QQQ sell, watch out below. And the Qs, by the way, as I just pulled them up, this is looking like a lower high. We got back up into the previous minor support level that broke. We held it as resistance in conjunction with the 21 EMA. If you guys remember, it was a morning meeting a day or two ago where we were trying to figure out the technical message of the market. And I said, if you look at the Qs in a vacuum, the Qs look like they're exactly at the point where you would be looking to short for a pivot high for downside continuation. The problem was everything else looked bullish as all hell. The SPY technicals looked really bullish. The IWM technicals looked really bullish at that time. The RSP technicals looked really bullish. The Dow, for whatever that's worth, looked really bullish. And now, everything looks a little bit different. The Qs, with this lower high here for downside continuation, they're almost back to year lows at this point. The SPYs we talked about already. But the IWM lost this 265 really yesterday, but confirmed it today in a big way. If the IWM breaks 255, it's going to be significantly worse, I think. I have a very small IWM short on compared to my other positions that I've had, but I have a 250 target on it, which seemed like a wide target to me. But, I was shorting that at, 264, I think, today. I forget exactly. And then got a pretty decent move on it. So now the IWM, we'll say it looks neutral. But look at this RSP. The RSP is notable today. Oh, am I getting a bad print on the RSP? Yeah, if a bad print, it's messing up the chart. This tail does not actually exist, so hopefully I can get a new print here to show it. But this is not a good-looking candle. Now, granted, it's just a pullback from extension into the equilibrium zone, and it's still above 200, which is where it broke out from, but it is a bit of a bearish engulfing candle. If that leads to RSP really getting back below 200, this thing's starting to look pretty bad. And then going back to the sectors to see if correlation is increasing, well, almost everything was down today. XLP and XLU still managed to have decent green days, albeit they closed off of highs. But the other extended, I forgot about XLE, which I also short. I shorted, at one point today I was short XLE, XLU, XLI, XLB, XLP, am I missing one? And XLU, all at the same time. I had 6 of them. I don't think I've ever done that before in my entire career. But, I liquidated XLB, I still have XLP, I still have XLU, I liquidated XLI, that was the best one, and I liquidated XLE, which I'm bullish on, but again, the technicals here, we're getting smoked. So, we I think saw a bit of an increase in correlation here. So market, got hit pretty hard across the board, and that's one of the big things that I've been looking for as well. So bottom line is things are looking, I would say, very precarious. We're not in full bear mode yet. You still got to break your lows for the SPYs to kind of get there. You still need to see this RSP, I think, get back below 200. You still need to see the IWM get below 255. But these, air quotes, dated take notice of situations oftentimes are the beginning of that. So I would not want to have a ton of long exposure on the books right now, or maybe like very idiosyncratic long exposure for a name here or there that, you know, maybe can hold up better than the market or something like that if things really begin to sell. So that is where we're at. Ooh, Bill K giving me the Goldman CTA flow expectations over the course of the next. Says it's still playing live stream there. Can you hear me now? Yeah, look, there's a real chance that I quit doing the YouTube channel for a little while, and I apologize for people who only listen in there but just get virtual trading floor access. I just can't. I can't deal with this internet. I genuinely can't deal with this. It's for some reason I have to switch to this internet connection in order to be able to stream on YouTube. If I don't do that, I'm 100% fine. So, you know, I might just quit these YouTube channels because I'm pulling my hair out here. I can't deal with it anymore. Get virtual trading floor access. If you are, I don't know, whatever. If you're only in the YouTube, just contact me and we'll see what we can do. Anyway, what was I even talking about? I lost my train of thought. Oh yeah. From Bill K here on the Goldman Sachs CTA flows. So this came out today. So over the course of the next 1 week in a flat tape, they are going to be selling 1.9 billion out of the U.S. It's not too big, but it's notable. In an up tape, they're still selling 1.5, and a down tape, they're selling 8.2. The 8.2 and the down tape is a little bit more notable. Over the course of the next month, they're basically doing nothing in a flat tape. They're buyers into an up tape. See, that's why, like, the fact that they're still buyers in an up tape shows you that they're not, like, at the 99th percentile of long exposure. They have enough where if things are really triggering to the downside, it can feed on itself, but they're not. I don't think that the market exposure from the systematic side is where it was last February, which is one of the things that has me. I'm bearish, but I'm not as bearish as I was a year ago today. And that is a big part of the reason. A year ago today, everybody was in the pool. Long short funds were long at the 99th percentile. Systematics were long at the 99th percentile. I don't think it's to that extreme of a degree at this point. But it doesn't mean you can't have a 5, 7, 12% pullback in the market either. And this still will be significant if we break down. That's a good question, Greg. I'm pretty sure that it was not as big, but it was probably the biggest it had ever been in history at that time, and it's probably exceeded that now. Yeah, it's probably exceeded that now, but you know, that's obviously something that has a big impact as well. So we got to pay attention to that. Yeah, everyone was, and it's not as much this time. So thanks for that. Oh, and I wanted to look up where these pivots are. So their short-term pivot is broken. That's 69.13. The medium-term one, which I think is like the most important one, is 67.23. That's actually well below the year lows. It's all the way down here. So we'll see if that can trigger it. There you go. There you go. Yeah, so you can see where we were a year ago, which was like that last big peak before the sell down. The sell down is in conjunction with the March-April sell-off. And now you can see where we are now. So even significantly higher on the ETF, the leverage ETF stuff. value stocks versus growth stocks in 2000. It's very similar to where it is now, right? Or was, I guess. There's been a mean reversion there so far this year. I don't have a chart of that in front of me. 6% value for the year, down over 20% growth, acted as a safe haven. Yeah. So it's got to be similar now. But, you know, the thing about correlations and safety trades is that the safe haven trades are where people run to park their money in the initial fear period. But then if that fear comes to play out, what eventually happens is that they sell that stuff back down too because they need to raise the cash. Because they're getting margin calls in other places, so then they have to sell the stuff that they had originally, you know, were trying to hide out in, and that is what increases correlations as well. Where it's like initially when that fear is there, you can see what we're seeing right now, which is XLP, XLU run higher, and everything else start to sell. But then eventually, at a certain point, you're getting that Bitcoin margin call, and you're selling your Procter and Gamble stock in order to be able to cover it. Yep. Try to hide. I don't think I really have anything else. I mean, it was a really good day. You know, we had some fantastic, fantastic calls today across the board. Some that I didn't even take, like this SanDisk short call out from right here at 10:15 was like a really good call. Obviously, you know, shorting XLB into this up move, shorting XLI into this up move. Third candle off the extension with the doji here, the 5-minute RDR in conjunction with what the daily looked like, and then the daily chart RDR triggered on the way down right here, and you know, really accelerated down further. Semiconductor shorts in the beginning of the day as well, with this SMH, you know, being back here. Some people are calling this a potential double top in SMH, which will prove to be true. I'm sure if the Nasdaq actually sells. So yeah, we'll see. I think it was actually pretty. I think we navigated today extremely well. So pat on the back here to the team. You love to see it. That's all I got. Happy to answer any questions that any of you guys have, and hope the internet doesn't do this thing again to me. Starting in the, yeah, wow, it's a hell of a chart tape. Starting in the VTF, I think from Robel is the first thing I'm saying. On the saying the generals are the last to get shot, how much credence do you give to it? And thoughts on memory. Thoughts on memory names playing the role of generals this time instead of Mag 7 last year. Seems like they're giving lower highs. Some of these expressions I definitely don't live by, and that's kind of one of them. I don't know. It's honestly a little bit tricky because the generals, I would still first of all, I would still consider the Mag 7 name to be the generals, and they've been getting shot for a while at this point. I mean, when did like Meta and Microsoft peak? I mean, Meta really peaked back in August. I think a lot of things peaked in October. I remember that's when the Qs peaked in October. This was like a Fed day in the Qs. Somewhere right up here was a Fed day in the Qs. Maybe the actual all-time high was a Fed day. I'm not 100% sure. Somewhere up there was. So you know, Microsoft really peaked back in October. Apple's a little wacky because it's kind of a defensive play. That really had its peak in December. Tesla peaked in December. Amazon peaked in the beginning of November. Nvidia, when was Nvidia above 200? Late October. So like depending on the stock, like October or early December is when most of these Mag 7 names really stopped participating, and then they've just kind of continued to weaken, particularly like Microsoft, obviously. but that's been the money that has created the rotation into the cyclicals, right? So there's two arguments to be made here, and I don't have a thought process on which is the correct argument. Um, one argument you could say is, hey, this has been a warning sign for quite some time, and that means that this market is ready to break down. The other thing that you could say is, people point at breadth, and breadth has been really, really positive. You can just see that by looking at the RSP, and people point that, people look at breadth as an indicator, and they say that this is super bullish. So you couldn't get the positive breadth without shooting the generals. So I don't know. Honestly, I don't know. I could see both arguments being made and both arguments potentially being right. So I really don't know. So I don't put a ton of credence on it, I guess, is the direct answer to the question. And then you're saying, what if the memory names are really like the leaders there? And I don't know. I just don't think that the market caps are big enough. I mean, maybe that's the wrong thought process. But it's just like one. It's like almost like a subsector within like the semiconductor sector is kind of memory, as far as I see it. So could like a subsector of SanDisk, Micron, WDC, STX like really be the generals of this market? I struggle to buy it. They're just in this own unique story that's created this strength that has continued them higher. It's interesting that you have a potential little lower high in Micron. I was chatting a little bit with my buddies JR and Sammy as a follow through with yesterday's kind of group talk. And I thought our group talk yesterday was great. If anybody missed that, you can check it out on the YouTube. We had a lot of fun, but we also talked about, I thought, some really good market related stuff. And there was just this big fight over SanDisk between kind of JR and Sammy, with me being in the middle ground, and that continued a little bit through email today. So because he got above where he wanted to get stopped out, but also, some of these names with the dojis that they gave today, Micron, SanDisk, they kind of look like little lower highs in the daily chart. So we'll see. I don't know. I don't have a great thought process on the question. I'm sorry. Yeah, 0 DTs from Kevin. How do you avoid getting deer in headlights during a move against you when you're off sides? Unfortunately, I let BE and ENPH turn into big losers so far. That means you're potentially still in them. BE got smoked today, and I saw that ENPH filled the gap almost today from its earnings report. What do you think of these names for bounces? I've been swinging BE since Tuesday, and I nailed yesterday's low in it. Yeah, nailed yesterday's low in it. Okay, so you're still kind of roughly in the money on this one. With an ad that I decided to swing, I was not prepared for a revisit of lows. Okay, cool. So a bunch of things to unpack with your questions. How do you avoid getting deer in headlights? So I don't really have that happen to me too much because I follow my game plans. I get angry is what happens to me personally. I kind of get genuinely pissed off. I do my best. Like, I've talked about this in plenty of afternoon meetings in the past. My biggest weakness as a trader has always been my ability to control my emotions. It's something that I have dramatically improved on over the course of my career. Especially, I think there was a big shift just as I got older. Me as a trader in my 20s with a really hot temper compared to me as a trader in my 30s, a little bit more cooler, calm, and collected. But still, I still definitely get just genuinely angry and pissed off sometimes when I have trades going against me. But the big positive, the big career advancement for me has been to have and feel those emotions, recognize those emotions, but never act on those emotions because I have game plans that I'm following. So I don't really get a deer in headlights ever, honestly, because I have a game plan on. and my game plan is telling me what I'm supposed to do when I'm off sides. So if you find that you have these positions that went against you and you're a deer in headlights and you don't know what to do, that means one of two things. It means that you either didn't have a complete game plan or that you didn't have the discipline to be able to follow it. And then you are in a, if, you put yourself in a really bad spot. And don't get me wrong, I've done this a million times and I still occasionally do it. You put yourself in a really bad spot when you are undisciplined with the game plan that you have on, because that's what kind of creates that deer in headlight situation. So I guess when that does happen, I just will like look at the situation and I'll just be like, all right, well, this is the situation as it currently stands. Um, I asked myself, what would you do if you were flat in the name here? And then I create a game plan on if, well, what if you just owned the stock right here at this price? Is kind of what I do. And then I have a new game plan, or I have a game plan again, I should say, because I was undisciplined the first time, and now I have something that I can once again follow. So that is what I do in that situation. What do you think of these names for bounces? You know, the problem is the market. I like ENPH for a bounce. I thought the earnings report was good. It pulled back to the 21 EMA here. It's pulled into a gap fill. I think that the ENPH is fine as long as it stays above 42.75. So that would be the area that I would kind of be looking at on this thing. And, you know, I think it's okay. This BE, I really don't like how this closed. Big picture below 130, it's shot. Smaller picture, you really don't want this thing below yesterday's low. I don't like how this could easily gap below yesterday's low, below today's low tomorrow morning if the market gaps down because we closed so weak. So this one actually scares me more than ENPH does, but neither of them are fully technically broken yet as far as I'm concerned. But I think that what dictates whether they hold those levels or not is going to be entirely the market. And the market, like I was just saying, is not something that I want to put my faith in right now. We could easily have an inside day tomorrow. We could open up green, have a digestion day for Feb 13th, and then potentially continue next week. And that might give you a bailout situation on some stuff, or if we were to get that and people are uncomfortable with their long exposure, if we could get like a little update inside day tomorrow, I would still judge that as actually setting up bear continuation for next week. But it could be the opportunity to kind of manage some positions a little bit and work your way out of some stuff. So I hope that helps. I'm just seeing Bill K's comments. More folks monetizing here than reaching for new outside. It's interesting. Yeah, smaller size helps for the deer and headlight situation, but you have to start that to begin with. I had a trader, I'm not going to mention who it is, reach out to me today, and he's a good trader, but has been, struggling recently. I think he's a talented guy, and he was like, man, I just realized, I just sized down everything I was doing in half by 50%, and I'm having just so much more success. And that matters. I don't think that you can just, if you already have the position on, you can't just be smaller. But what you can do is just be smaller a little bit, kind of going forward while you're rebuilding. Also, I say this a lot, and we gotta recognize it. When volatility increases, movement increases, you generally need to be smaller on your sizing and look for larger moves on smaller sizes on both the risk side and on the reward side. Yeah. So, and what I was going to say is you could definitely make the argument, look where the VIX has been, look where the SPYs have been, that there has been no volatility, but we're trading stocks. We're not solely index traders here, even if we're doing that as well. And while index volatility has been historically low, single stock volatility has been historically high. So you can't see it when you're looking at the chart of the SPY necessarily, even though we got a little bit of a taste today. But underneath the surface, there's been tremendous single stock volatility, which just means that you have to have your sizing appropriate. You got to be careful about being too early on size. And I know myself personally, I am very regularly too early on stuff. So, I've really been making sure in this environment recently, like, I'm starting smaller, I'm taking things smaller so that things can have more time to breathe. Things can potentially push against me a little bit because I'm smaller and I'm waiting and I'm sizing up as things get more extended instead of just being as heavy as I might be otherwise, kind of more immediately. It's a partial potential shutdown, right? Not a full shutdown, not a full government shutdown. They should probably just keep the government shut down for the next, maybe 3 years. From Vincent, what do you think about a short on SOXL if the price goes up to 67.30? I think you needed to have it today. I think you wanted to get that trade on today. I get the idea. Maybe they'll let you in. That's like a 50% retracement of today's move, roughly, just kind of staring at it. So maybe they'll let you in the situation that I described earlier, where like if we have kind of a gap up inside day that could potentially set up additional bearishness for next week happens. But broadly speaking, I would just say like you want to try to have this idea a little bit earlier, really like this morning, and try to kind of get this a little bit earlier. Like I was shorting semiconductors this morning and communicating that, right? And it worked okay. Over on the YouTube from Scott. Coin last I saw was trading down a little bit on the earnings report. Cryptocurrency is done. It's over. And we saw another, it's up now. We saw another crypto company, Blockfills. Blockfills is blowing up. So, bye-bye. Maybe the correction is happening in software. Yeah, well, the correction, I mean, that's been the big thing. I talked about this in some other afternoon meetings recently. The pairs trade that I was putting on Thursday a week ago was long software, short like consumer staples, which is a weird pairs trade, but again, it goes back to this dispersion effect that the market has been having right now and how extremely extended the downside software has gotten, and how extremely extended to the upside. Like the consumer staples and materials and XLB and all those sectors have become. And at that time, I kind of described one of two things, and I still kind of think this way. Either the market holds in and you get mean reversion to some degree, where you get a bigger bounce, which we already really got last week. It's a tougher setup now, but we've still held the low from last week so far, where you get a bigger bounce in software and the upside extended sectors like XLP, XLI, XLB, all the ones that I was shorting today, pull back. That's like the more bullish market case. The bearish market case that you got to keep in mind, and you got to be careful with the software stuff. The trade was really there Thursday last week, and it worked great for a couple days. If the market gets shot, and I think this is what happened today, honestly, because at certain points during the day, Microsoft was green, which is the number one weighting in IGV. Microsoft was green for a lot of today, and it looked like some of the software was trying to hold in, but then it failed because when the market is doing this, it's gonna fail. So that's the bear case is that correlations increase, the market sells, and you're not going to get the mean reversion balance, I don't think, in IGV if the entire market's selling and correlations are increasing. The bull case is that the market holds in and potentially even breaks up, which now that's significantly lower probability after today, and you get mean reversion where software Mag 7 bounces and they pull back on consumer staples and those other sectors that I was mentioning. Yeah, I mean, I have a small long in CRM myself that I still have on from a week ago though. I've been in this for a while. And this actually, it's a small position. This actually broke new lows, so I do have that on, but it's the same issue. And it's a very small long that I have. That I've been offsetting with Q shorts and UPRO shorts and IWM shorts and everything else I can get my hands on. Where is the CTA cell trigger per Goldman Sachs? The short-term CTA cell trigger is 69.13. So the short-term one breached, and then the medium-term one, which I think is the big one, is 67.23 per Goldman. Again, these are just model estimates. Bank of America's, I'm pretty sure, is higher. Bank of America's, I think, is closer to like 67.80. But I actually prefer the Goldman model. I prefer the Goldman numbers just based on what I've seen historically. From Unarm, sorry if I missed this, but can you give Cat a look? I bought some puts at 780. Yeah, so Cat is XLI, and we talked about Caterpillar in my morning meeting this morning. You know, I was focused on the ETFs, but Caterpillar RDR was in play today and was something you definitely could have shorted. Deere RDR was completely in play today and something you definitely could have shorted. What does Honeywell look like? Honeywell, not the same setup. I like the Deere and Cat better. So yeah, these broke today. XLI broke today. I think that you can get broader pullbacks in this. I think a pullback to the 730s is very possible. 730 to 7, let's call it 720 to conservatively 740 in a relatively near term, I think is very possible for Caterpillar. Kaz, what I'm looking at too, the trend